Hey traders, it's Leaf West making another video. I'm going to go over a couple things. The first one is the spider. We had another key reversal trade this morning. I was hawking that because if you've been reading my blog posting, I was bullish coming into this morning, so I let the market open like I usually do, and then I was looking for a spot where the market was going to reverse, and I caught a bit of a winner there, and I actually shorted the spiders later in the day based on my bigger viewpoint of where resistance will come in. And I encourage you to read my blog and read about that. But I'll try and show you how I manage that trade because I think that's worthwhile to look at. And then finally, I want to show you an open range trade that I did today as well on Apple. And I've been hawking Apple. I've been thinking that's going to get going here, and I got part of that trade today, but not enough and not long enough. I was on it hard yesterday morning, but was a day early and a dollar short. Okay, so let's start with the spiders. This is a 3-minute chart. Let me just clean it up and focus on the first part of the morning. Okay, here is the 1-minute chart for focusing on first thing this morning. Again, we had another gap up, and the market basically sold off from the get-go for the first roughly half hour. There's some news, economic news on in the morning at 10 o'clock Eastern time, and a lot of times the market will sell into that and then reverse. So that's one thing you should look for as traders. But again, as I mentioned, I let the market open and then I was just tracing it or following it down to find a reversal point. And shortly after the bottom was actually put in, I put up this grid, which I'll highlight just to concentrate on. And you can see, and I go over this time and time again, but it's really key to getting experience and understanding of this kind of pattern and how to trade it. We bounce off there fairly hard, but again, you don't know if that's just a bounce and it's just going to roll over and break the low of the day and head further south. So I encourage people to try and wait to see if the market's going to show you that it wants to go higher. And I generally categorize that as holding above the 61.8% level, which is this blue line, and more directly showing you lots of bars action, back and forth action between the 78.6 and the breakout level of the pattern. That shows you at least that there's lots of decision making going on, buyers fighting sellers, sellers fighting buyers, and then eventually whoever is the more dominant one will win the fight. And again, what happens quite often, especially when you have quite a few bars going along in that area before the breakout, is you will break out and then you will pull back in. And generally, what I will try and do is watch these two levels, the 78.6 and the 61.8. If you can hold this area, I try and buy it there. If you drop below the 78.6 quickly, I trust that less, and so I will actually wait till it shows me strength and moves back up. But if it's chopping around quite a bit, I'll try and find a sort of an average price of the chop and try and buy right in the middle of that chop. And today I was able to get a pretty good price. I think I got around 35 cents today. And then lo and behold, it breaks that pattern, and I took my full profit today at the first target, which was 125. Basically, I took it off at 125. Let me show you why I did that. When you have these opens which sell off right from the get-go, you never know if market is going to bounce and then roll over and head south. So I like to put up the bigger retracement levels just to keep an eye on what the market is doing. And I'll show you that by taking off my one pattern. And so you can see here that even though I hit the first target and took profits at 125, that was right at the 78.6 level of the full high to low retracement for the day. So I took it off wanting to see what the market was going to do. I didn't really trust it. And so the market did correct off that level, and I wanted to show you another thing that people can do to watch these pullbacks. I encourage people to, when the market has made a strong move like this, and basically two kind of legs higher to really watch the retracements, because generally all you're really doing is you're correcting the move. You're not going to just reverse and start another trend lower. So what I try and do, and I didn't do this because I was actually on to Apple at the time, but you can just extend the waves. You want to see a correction pattern. You want to see an ABC, a two-legged move lower, which is exactly what we got. And if you measure the first wave and put a target out there, you can see when price starts to reverse out of that target zone, that can be basically a trigger for you to get long the spider again here. Again, I wasn't involved in the spider at this point, but that's kind of how I look at things when I'm hawking a stock. That if it makes a move and I hit a target and I sell it, especially if I sell it all, I'll watch it for a while to see if it will give me a correction that I can sort of play. Hang on one sec. The computer is acting funny right now, but and once you finish that retracement, and if you did get long stock, I would encourage you again to try and get a target in place to monitor the progress. And so you can do a reverse fib based on this correction and put a target out there, and the target range would have been, as you can see, 125.31 to 125.52, and we poked inside there on this candle right here, and basically chopped sideways for a good couple of, or a good hour at least. And let me just zoom out to a 3-minute chart. So this is a 3-minute chart, and you can see that here's the spot where I took my profits, and here's that correction we looked at, and then here's the top of the next projected wave. You can see what happened really right through sort of the lunch hour sort of grind that often happens, is that price corrected sideways in time, more or less. And if you look at the lower part of it, you can actually probably see, hang on. You can see actually that there was an upward sort of sloped wedge that was in place. And if you were watching it and prepared, you could have gotten long on the break of that triangle. That's again, I was on Apple at the time and wasn't trading the spider at this time. But if you go back to this, and I went back to this, and I saw the chart later, and I drew a target based on the move into that triangle, and then what it would project going out of the triangle. So let me get that up for you. This is important. So again, here I drew these targets off of the first move up into this consolidation pattern, and I projected out to 125.80 to 126.40 was the projected end for the pattern coming out of that contracting wedge that we saw through the lunch hour. Anyways, why it's important is because my bigger viewpoint on the spiders was that we were going to have resistance between 125.10 and 126.10. So that area was sort of the top end of my spot. I was looking potentially for the market to find a lid and reverse off of. And so I tried shorting off of that level and made a little bit of money, but I want to show you how I managed it because I think it's important for people to pay attention to. Okay, we're back to the 1-minute chart on the spider, and the time frame sitting in front of us is about 2 o'clock Eastern to the close. And again, we got into my 126.10 level that I thought was going to be a potential stumbling block for the spider, and it was around the 2 o'clock, 2:30 area, which a lot of market reversals happen at. And so I was looking to short the spider here. I got a happy dog in the background. Okay, I got my dog to be quiet. So I was watching this very closely. When we put this doji in at around the 126.10 level, I started my shorting process. I wanted to get involved here. So I shorted, I think it was 126.02 or something like that, the first try. So when we broke the bottom of this first doji on the 1-minute bar after hitting 126.10 level, I tried to start a short. And then I was just going to I wanted to see what would happen. I wanted to see it to come down and hopefully get a bounce higher that was weaker and showed me weakness. And sure enough, we did that. And so I shorted another piece at I think at 126, actually at 126.10 or 126.11. I can't remember now. And again, I've got a grid up now so I can watch where in this pattern price is heading. And so again, it's showing me it can't get back above 78.6. So I'm thinking we got a chance to make this thing work. And so I shorted again, and I forget offhand what level. I think it was around the 38.2% level, which was around 125.93, 95. And we hit the bottom, bounced up again, and failed at the 38.6 level. And this is when I took my stop down. I think I had it originally at 35 cents. Again, I can't remember offhand now. And I took it down to I think 10 cents above my, or actually somewhere in here. I think it was 126.15, 126.17. And then, and as price rolled down here and showed me that it wanted to at least attempt to break lower, I did a couple things. One is I kept stepping my stop lower and lower because I want to show you something that we really haven't proved that this is a major top yet. All this could have been is a correction. So actually, I measured the waves, and here's the target I had. So you actually see that my target, if this was a correction, was 127. I'm sorry, 125.64, which we bounced off of. And when that happened, I lowered my stop down to I think at what was it, 125.92. I think it was, and it's wherever I got stopped out. That's where I had lowered to. At that point, I said, okay, if you're going to roll over and continue to keep going lower, I can bring my stop down to a point that's as low as I can comfortably be right here without getting stopped out on a trade that's still going to work. So I did that. I got stopped out, and the market corrected higher, which again, I'll show you a couple of things. The first thing is once you've determined that it's a corrective move and that you're not trending lower, you can flip it around and put a projection on where that wave will potentially end based on this retracement pattern. And that gave me a target of 126.37 to 126.57. So I wasn't about to give up on the idea of this being major resistance, because if you look at the total move from the last week in October to November 1st downward, the 61.8% level, retracement level, is at 126.45, I believe, or 126.40. So that's a big level. It's 126.40 is a big level. And going into the jobs number tomorrow, and the market being so extended and at my target levels, I took a small overnight position and was able to get short again at 42 cents. So I was happy to get short there and try it for tomorrow. And if it does gap higher tomorrow because of positive news or whatever, I'm going to give it a bit of time and try and add to my short if it does gap higher to see if we can get a reversal off of that gap higher like we did, for instance, this morning, and then make a little bit of money even though I may be offside on my first shorting position. And this is too long now as it is, so I'll have to leave it at that, guys. All right, have a good night. Bye.